Right now, let's get to Wall Street. Tuesday, a brutal day for investors, the worst since June of 2020, which was the peak of the pandemic. The Dow and S&P each fell around 4%, the NASDAQ plunging over 5%. The sell-off sparked by the latest inflation report released before the opening bell. NewsNation business contributor Lydia Moynihan joining us right now. Lydia, the August Consumer Price Index actually showed inflation has gone down 2 consecutive months. So why is there a big sell-off on Wall Street?
We were expecting a much bigger drop in that overall number, and it's important to note that the number the Federal Reserve looks at, that core inflation number, doesn't factor in energy or food prices. That number that they look at when they're considering whether or not to raise rates actually went up. So it was sort of a paradigm shift. We were hoping for a mission accomplished moment where we were going to see a dramatic drop in inflation, and instead we got this sort of crisis is ongoing moment. The other concern here is that the main thing that was moving inflation lower was a decrease in energy prices, and it certainly wasn't really enough to combat the rising food prices, stubbornly high shelter prices. But the concern with that is that as we go into the winter, there might be an increase in demand for energy, and that's going to spike the price of energy high. So there wasn't really any sort of good sign in this report that suggests overall the economy is cooling down and the prices will continue a downward trajectory.
One more question here. Could these numbers actually mean another interest rate hike is coming?
And that's a big reason why we saw markets plummet. Again, I think the markets had sort of priced in the Federal Reserve not hiking rates more than maybe 50, 75 basis points. And we're looking at likely another 75 basis points after this report, which was much worse than expected, came out. There was chatter on Wall Street, sort of 20% of people now saying that the Federal Reserve could actually increase rates another 100 basis point hike, another 100 basis points. Clearly, this is a sign that whatever they're doing, even though it's been fairly aggressive the past few months, has not been enough. And Jerome Powell has said a number of times he's willing to sort of have the economy experience pain. And so certainly that 75 or the 100 basis point number is in line with what he's suggesting in terms of being more aggressive.
So how far does inflation actually need to fall? I have to follow up with that in order for the Fed to kind of take its foot off the gas.
Well, it hasn't really fallen. Again, that core number that they're looking at, that increase, we went from 5.9% last month to 6.3%. So we need to see that number actually come down. A lot of economists are saying the Federal Reserve wants to see at least 3 consecutive months of declines. So that's why going into this report, we thought, okay, if we see a good number, maybe that's a sign the Federal Reserve won't have to be as aggressive down the line, that maybe next year they can take their foot off the gas when it comes to raising rates. And so that is not anywhere near where we seem to be at this moment. So certainly it seems like we will be facing interest rate hikes at least through next year.
All right, Lydia, I'm sure this is news that nobody really wants to enjoy or hear, but it's the reality, the bitter pill to swallow. Thank you. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.